and journal. I really appreciate everybody who's been watching all the videos. Please hit the like button, hit the subscribe button, comment with what you want me to make videos about, what you're interested in and what you want to see me do, and that'll kind of dictate the next videos I make. I really appreciate everybody that sent messages, liked the video, and subscribed so far. We're going to go over some news as the market closes and check the balances at the end of the day here. We ended the day with the RobinHood portfolio up $116. 1.4% is really what we're looking at here. We did make some stock purchases today, very important. Aurora Cannabis, as we talked about earlier, they report Q4 numbers tomorrow after market. The stock was running up today, so I wanted to kind of get a bit. We are down in Aurora Cannabis, as you can see, and CGC. We started this account a little less than a year ago. We started this account January 30th, and at first I dumped a lot of money into cannabis stocks here, these two specifically, and then I did a little options trading here where you see a big drop, and here I just start pouring my money into dividend stocks, kind of changing my strategy here as I look around YouTube and find some other great investors that are out there and kind of follow around, kind of tailor it to myself. I still have some growth stocks, but also looking for a lot of dividend investing. So waiting for that, we kind of positioned ourselves lower, added a little bit. Funny enough, we're up to 420 shares. I think that's the perfect number. We're going to stick with that. You know, they have a lot of good things going for them. They're the #1 producer up in Canada. They seem to have great strategy in going for production of quality flower at the lowest cost possible. They're going with very large commercial facilities. I think there's a lot to it. I also do like Canopy Growth. They're doing the same thing. Both these companies have raised so much money, and they're able to acquire a lot of the smaller names and bring them in-house. I snuck around my company policies, and I gave your YouTube a sub. That's what's up, Chew and Brew. Talking cannabis stocks, that's one I want to get into. Absolutely, yes. And that's where I started. I don't suggest starting there, but definitely having some. I do think this is a bottom for ACB. If you look at the 5-year here, look at the chart, look at the wedge we're creating. If you drew from this new high here and you drew a line where all these bottoms touch here, it's kind of going up a little bit. You see a line wedge coming down, and I think after we report these numbers, we're going to get another spike up. I think this is a great purchasing opportunity right now, and I went ahead and purchased some shares today of ACB. Get that out of the way. Another stock I purchased today. Ooh, who'd we get a... Okay, thank you for the follow. Wonderful. All right, so we also purchased a stock, and this is a new position we started today. Maxar Technologies, and we started a position because of this article here. Only time will tell if we did it right or not. Need to add some funds to my RobinHood account. Space company Maxar shares rally as JP Morgan calls for the stock to climb 70%. Well, today it's up 19% at close. I bought at 8.28 and it's at 8.38 at close. Very interesting. We're up on our purchase. JP Morgan began coverage of Maxar Technologies on Tuesday with an overweight rating, telling investors that the diminished space conglomerate is in the early stages of turnaround that would yield over 70% upside by the end of 2020. They see Maxar as a high-risk, high-reward opportunity. The company is extremely leveraged with very, very high debt levels, and they need to create a lot of value to even that out. Maxar's stock jumped as much as 13%. We can see where it closed. And seeing the firm's target is conservative based on its sum of all parts analysis of Maxar's 4 business units. We could see greater upside after the company addresses its debt overhauling. JP Morgan's blue sky scenario would see Maxar stock at over 20 a share, which would represent an increase of nearly 185%. The firm's downside case for Maxar's debt load would slowly crush the company. Would see the stock's value at $5 a share or potentially zero. We believe investors will need to become more comfortable with the company's cash generation potential and removing debt and leverage overhauling. About 2.5 years ago, Maxar stock traded as high as $66 a share and was completing its merger with Digital Globe. The company had also previously merged with Space Systems Laurel, the satellite manufacturing company that is today Maxar unit. Maxar came together in late 2017, but quickly ran into trouble at SSL and then lost a high-margin imagery satellite. Additionally, the companies entered an investment cycle that resulted in significant cash outflows, all while saddled with new debt from the transaction that created Maxar. At the stock's low in March of $3.96 a share, Maxar had lost nearly 95% of its value, but Maxar shares have slowly begun to rise over the past 6 months. They appointed Dan Jablowski, previously leader at Digital Global Unit, as CEO in January. The stock has also had a large percentage gain following recent wins, such as a NASA contract for Maxar to build a lunar orbiting platform, very interesting, and a report it may sell its space robotics business, MDA, for more than $1 billion. Like, come on, let's go. I'm in. I'll take a little gamble. This is a very high-risk stock, but at the same time, it pays a dividend. Look, this pays a dividend. So, I mean, you got to weigh it all. It's all a personal weight, and I am willing to, it's not like I invested $1,000 or anything in the company. I picked up, what? How many shares did I pick up of Maxar? I have 5 shares of the company. You know what I mean? I got $40. $40. And it pays a dividend. Kick me that dividend, yo. Trying to see the dividend now. It doesn't have that much of a history. This company was just created in 2017, see? So it doesn't have that much of a history. So, maybe we found a bottom here. This is another interesting part to me. As you look at this chart here, it seems to have found a floor. We have found a floor here. Maybe we are going to start climbing back up from there. So that maybe that was... I mean, I'm interested to throw a couple bucks at it. It pays a dividend. Very, very interesting one for me, Well, I'm still here. So the M1 Finance, this one did go ahead and distribute into all these. Not much to report here. Values, we're down $1. Whatever. We need to put some more money in, get money to work, and kind of let this portfolio start to realize some gains. Some other freaking amazing news for today. Apple released all new products. So new iPhones coming out. The iPhone 11, iPhone 11 Pro, and iPhone 11 Pro Max. The $699 iPhone 11, that's pretty cheap. I always thought they were going to make like $1,000 phones. The $999 11 Pro and the $1,099 iPhone 11 Pro Max. All 3 devices appear similar to the predecessor. Upgraded camera systems for wider angle photos, improvements under the hood that result in longer battery life, faster performance than before. Apple also rolled out the Watch 5 series, which starts at $399, features a new always-on display. So their new OLED display technology, which was specifically created by Apple, allows it to be always on and still has 18-hour battery life. Very interesting. New 7th generation iPad priced at $329, 10.2-inch display. Also very interesting. I do love my iPad. I don't have an iPhone. I have a Google phone. I just bought a TV, an Element TV that works with Google. But it's all interesting. I am buying Apple stock. They do pay a dividend, so messing with it. And then Apple TV, this is very interesting. Apple TV, they also released, will cost $4.99 per month. And here's how that's going to compare with Disney Plus. So Apple TV, $4.99 a month, free for a year with your purchase of a new device. ESPN Plus, $4.99 a month. Hulu with ads, $5.99 a month. CBS All Access, $5.99 a month. Disney Plus, $6.99 a month. Stars, $8.99 a month. Showtime, $10.99 a month. Hulu no ads, $11.99 a month. Netflix, $12.99 a month. And Amazon Prime Video, $12.99 a month. And HBO is the most. Wow, $14.99 a month. Yo, what are they gonna do now that the one show's over? Their little medieval show. Nobody likes to say they like Dungeons and Dragons or WoW or anything like that, but they all love to watch the medieval show, though. Shit's so funny to me. So here's my thing with this. Because titties, exactly. I really like Disney Plus and Netflix. Like they're saying, Netflix stock is going down because of this Apple TV release and the Disney Plus release. And here's my thing with these, is I really think that Netflix understood this from the beginning. And in the beginning, to get their company started, they were a service with everybody's content. Whoever would give them content for them to put on their platform, they did. But now Netflix is creating their own content. Tons of Netflix original, and they're throwing around millions, billions of dollars to create their own content. And I think they're starting to compete with CBS and HBO and Apple TV and ESPN. And I think they've gotten so big that they're their own content creation and delivery platform now. I don't see them going away anytime soon. So I like Netflix. I'm a buyer of Netflix. Disney Plus, I think that they have bought so much content, and I like their cradle to grave approach where they take care of you as a baby with content. They have content for teenagers. They have cruise ships for, kids in college all the way up to, senior citizen cruise ships and things like that. They make movies for senior citizens and young adults and things like that, and then they help their young adults who have kids, raise their children with content. I think Disney Plus owns a lot of content, and when they get in the streaming game, they're going to be something to mess with. Apple says they're going to come out with their own content, but I'm interested to see how they get in the game late, how much they spend on content, and for $4.99 a month, what am I getting? You know what I mean? Like, is it worth me? Do I want it? I'm moving away from Apple products myself personally. No hate. I do like their products. I like their phones. I just wanted something a little cheaper. I'm already in the Google atmosphere with Gmail and Google Documents, and just kind of going the route of the phone and things like that worked. When I built this computer, that MacBook, that's a MacBook behind me right there. That was one of the first laptops I ever bought. I loved it. But when I built my own computer, I went Windows, so I've kind of swung back the other way, and just using Gmail, I've kind of become a user of Google products as much as possible. So I guess that's it for that. Counts up, which is always good. We're hanging out. And we're going to end this. So HBO is buying up some other properties to compete. They have a deal with some of the DC comic properties right now, like Watchmen and Doom Patrol. Dang, see, it's all going to be about content, and that's how HBO might be able to command that large price in the future. I'm interested. We're going to let this video go for now. It's 12 minutes long. That was a great little video. Hey, please like, subscribe. Leave a comment on the YouTube of what you want more videos to be about, whether you like the news, the portfolio updates, and all that stuff. That really helps. And for those of you on Twitch, Chew and Brew, we will be right back. I think we're going to fire it up with a delay to play a little bit of poker, and we'll go from there. Peace.